So with your permission, may I share a little bit about stock market which can help you to make a decision now that how you should be behaving at this point of time. Important for a lot of people that stock market is being corrected so much in last few trading days. There is so much of downfall in stock market which has happened, and a lot of calls I received in these last few days. Is it the right time to invest? Would it be good for me if I pull out my money? I don't want to take further risk. I will lose my capital. Is it right to be in stock market? So on and so forth. Let me share for the benefit of all those people whose participation is there in the stock market world. I am not a professional on speaking on stock specifics, but yes, we've been following over so many years the stock market industry, the sector wise, and even the fund manager wise, and even overall market behavior based on the economics, that we certainly have our suggestions, our point of view pertaining to the market. So with your permission, may I share a little bit about stock market which can help you to make a decision now that how you should be behaving at this point of time. Should you come out? Should you stay invested? And how should you approach this market? So may I? Thank you so much. So let me share this with you. In the recent market where markets have corrected so much, certainly mid caps have fallen like crazy. A mid cap industry has fallen like crazy over a period of few months, and especially in the last 2 days. And you can certainly see a big downfall of a large cap industry, a big downfall. There are many reasons for the same. Crude oil price, some may say, rupee depreciating, some may say, bank restructuring, some may say, political uncertainty, some may say. Everybody has their opinions why this is happening, FII leaving out. But nevertheless, events keep happening decades on decades, year on year. There are some reason why market should be corrected, always. There was Harshad Mehta, there was Lehman crisis, Lehman Brothers. There were so many reasons why market broke time and again in different years. But remember one thing, that market Sensex started from 100 rupees and today Sensex is at 30,000 plus rupee, right? So whatever incidents have taken place, market has always grown up and always picked up. Do you agree with that? And if you agree with that, you also need to understand, as an economy, are we doing good or not? As an economy, are we growing or not? Should we continuously stay invested in this economy? Do you believe in this economy, that this economy is going to create more results for so many people out there? So let me share some data with you. How can you see this market? Should you be there or should you stay away? If you have a portfolio which is positive, you can certainly want to book the profits and come out, because you don't like volatility, you don't want to take a risk if you have a short-term need. If only you have a short-term need of the money, it's good time for you to book your profits and come out, because there is a short-term need which is triggering in your life or in your business. But what if there is no short-term need and you have invested in this market because you believe in this market? In that case, I would recommend strongly that you continuously to stay invested in this market. Continuously. There's no reason for you coming out. Market may be volatile, market may be stagnant. There will be a lot of things which will happen. So you stay continued. But if your portfolio is in negative, 100%, there's no reason for you to come out in a negative portfolio, because you can rather think if you would like to reinvest when the markets are being corrected, because it's an only opportunity for you in a fallen market to grab the stock prices or the NAV of the fund houses in a lower diminishing market, or a market which has got corrected. Will the market further correct? Why not? Maybe, may not be. We cannot time the market. The best of the gurus have not been in a position to time this market. And I would strongly advise it's better that you and me don't do that. Let's not time the market, because it's not going to make sense. We don't know what the market behavior. We don't know which billion-dollar company is going to come and invest billions of rupees in this market. We have no clue about it. We don't know the psychological behavior behind the investor. We don't know the governments which are going to take some good actions, some good moves which are going to benefit this market. We have no clue about it, right? So now for people who want to invest in this market, when the markets are in such condition, what would be the right sector to invest? I would strongly recommend you can focus on large cap sectors in such market, because large cap sectors will probably help you with less volatility. And if market has to grow up overall the Nifty, then certainly the large cap counters are going to complement your Nifty. Do you understand that? So you can invest into large cap companies. For the benefit of people who don't understand large cap, these are the top 50 companies or 100 companies which has the biggest market valuation or capitalization in the stock market. So you can focus on large cap companies. For others, what would be the best way to invest into this market? So if you are a kind of person who's sitting with 100 rupee, would it be appropriate for you to invest all the 100 rupee in this market? At the moment, I would strongly recommend, based on my experience, that you can invest certainly 50% of your capital right away and hold the remaining 50% if there is any correction. Because even the remaining 50% staying in the bond market, the liquid market, the bond market or the debt market, it's still going to be very valuable, because I believe debt funds are going to do very, very good in over a period of 3 to 5 years in this country. So even if your money is parked in debt 50%, it's absolutely okay. So two things I said: the equity market and the bond market. 50% you can invest into equity market at the immediate point of time. For people who were asking me, which kind of sectors can I invest? So yeah, all sectors are good, but there are some sectors which I personally feel are certainly favorable. Number one, the banking and financial service sector, and number two, an infrastructure sector. Because I feel there's a huge rebalancing which has taken place in the banking industry, and market has already discounted those. If market is further going to discount, it's absolutely okay. But banking and financial services are the backbone of this country. The country will grow well if the banking and financial service sector is robust, if it is there to give loans to more people, benefit more businesses to increase their corporation growth. Yes, banking and financial service sector is a lifeline to this country. Which sector gets maximum benefit with this? Certainly an infrastructure sector. Is this country investing on infrastructure? I'm sure you will not disagree with me that infrastructure sector has taken lot of rebalancing already across India, and government is spending left, right, center on infrastructure development. In few cases, the state government is doing a phenomenal job, and certainly the central government is doing extraordinary job when it comes to infrastructure development. The amount of money they are deploying for business to become more ease here in this country is awesome. The port, the airways, the roadways, and I think even the railways, they are doing whatever it takes to ensure there's a faster connectivity in this nation. So this is going to certainly complement your investment. If you want a sectorial investment, I personally prefer an infrastructure or a banking and financial service sector. It doesn't mean that other sectors are bad. This is my opinion that these sectors can do better. People who are holding pharma sector can certainly stay invested in pharma sector. Pharma sectors have had a lot of corrections already in the past. You can be invested. It's a contra. It may add value to you going forward also. For people who are young, who are just starting up, or for businesses who are planning to build a very long-term portfolio, I would strongly recommend to start entering into a systematic investment plan, an SIP plan. Start investing into equity market. These are fantastic levels. In SIP, all the levels are fantastic. Since you have a very long-term objective, you can systematically start accumulating week on week or month on month based on your cash flows. So yes, if you want to approach, you can approach in that fashion as well. And for a lot of people whose money is sitting in debt, fixed deposits and some bonds, I would strongly recommend you, it's a good time to enter. Start doing a systematic transfer from your debt or fixed deposit to equity market and start building your foundation on the world of equity. Equity world is nothing but you are giving money because you believe that the company or the country will grow, and those companies are going to grow and generate returns which will reflect on your stock prices. So thank you friends for allowing me to share on stock market.